6 o'clock this morning, I was talking to Owen. I said we've seen some ups, and they're still there.
They are still there, Stuart. For how long, though, in this market is a difficult one to answer right now. But to be honest, I think working hour by hour on the markets is probably the best way to operate at the moment. You're absolutely right. The European markets have opened up fairly strongly, continuing a pattern we saw on Wall Street on Monday. Those are the numbers on the European markets. You can see there the FTSE leading the charge, around 1% up. It's not all great, though. Portugal, the market's opening down there. They're the subject of more inspections by the EU and the IMF. Remember, they're also in a bailout program right now. On the Asian markets, again, a pretty strong day showing with the Nikkei finishing more than 1% up. But let's not get too carried away. Remember, the Nikkei is well below that 9,000 point threshold. So it's seen a huge sell-off in the past couple of weeks or so, as have other major exchanges.
One or two earnings out as well. I've seen some numbers flashing up on my computer about Marks and Spencer's.
Yeah, full year earnings out for Marks and Spencer. Always one to watch, partly because they're expanding across the world right now, not least in Paris. You remember, Stuart, they opened up a store on the Champs-Elysees just before Christmas.
Small, isn't it? But it's there.
So a little bit small, a little bit pokey. This is the first time in 3 years their net profits have been down around 16% to just over £500 million. What did catch my eye, though, was that general merchandise is down. We're talking about things like furniture. Now, M&S are at a bit of a crossroads with this, wondering whether it's worth continuing with these kind of lines when other, the traditional things like food and clothes seem to be their strong sellers. What's good for M&S, though, is international sales are up nearly 6%. Stuart mentioned the store in Paris. Marks & Spencer's is expanding once again right across the world. In fact, they're going to have 100 international stores open per year over the next few years. And by the end of this year, say, they will have 10 international websites to sell their wares. So big international expansion. You might remember M&S virtually gave up on international stores around 10 years ago. So they're back in force. The wheel has come full circle.
Bit of a change around, isn't it? Another change around? Don't know, we'll find out. Facebook's shares, they've opened nearly 5% down on its German listing. That follows an 11% dip in trading on Wall Street yesterday. The social network's flotation has made billionaires, of course, of its founders, but those who bought in over the last few days are nursing some heavy losses. Stephen Carroll has more.
A status on the slide, Mark Zuckerberg could be posting about a second bad day on the markets. After its much-heralded launch on the New York Stock Exchange, Facebook's early days in trading have been turbulent. First, a technical glitch at Nasdaq, swamped by the exchange of 581 million Facebook shares on Friday. Some analysts say that could have scared away investors on Monday, even though the problem was resolved. But others believe the plunge in price by 11% on Monday was because the company is fundamentally overvalued. Last year, Facebook had revenues of $3.7 billion. Its worth at the time of launch onto the market estimated at $104 billion.
I mean, the company is valued at something like 75 or 100 times earnings. And we really have no indication that it's going to be able to earn, the kind of revenue that would justify that valuation.
Despite the difficulties, Facebook is still causing a stir in trading. It was the most bought and sold stock on Monday on US markets, with 168 million shares changing hands. But the company has an uphill battle ahead to convince investors it can boost its earnings.
Let's get a bit more of the day's business news then. And JP Morgan Chase's shares have sunk another 3% after the investment bank announced it was suspending a $15 billion share buyback. The US firm made the move to preserve capital in the wake of the $2 billion trading loss over credit derivatives. Its share price has dived nearly 25% since the scandal broke earlier this month, losing an estimated $30 billion in market value.
Former Goldman Sachs board member Raj Gupta has gone on trial in the US for insider trading. Prosecutors in New York told Gupta he broke the law by sharing company secrets from both Goldman and Procter & Gamble. It's alleged Gupta passed valuable information onto his former business partner Raj Rajaratnam, who was himself convicted last year of insider trading. Gupta denies the charges.
And fashion label Gucci has just won a fraction of the damages it was seeking from rival Guess over copyright infringement. A US judge awarded the Italian company $4.6 million, much less than the $120 million it was originally seeking against Guess. Gucci had argued that its rival had tried to copy its styles of wallets, belts and shoes. Gucci won a copyright injunction against Guess over 4 designs, but was told it wasn't entitled to damages relating to damage to its brand.
You can tell I don't work in fashion because I see both of those and think I can't tell the difference.
Exactly
anyway,
the same.
That was obviously the point of that case.
Yeah.
That Gucci complaining that Guess's wares looked just a little bit too much like their own. Well, next here on Business, splitting up to keep it all together. Qantas has announced it's dividing itself into two separate companies. It's the latest twist in a turbulent 12 months for an airline that was once the envy of the industry, but now finds itself in serious trouble. William Hildebrand has the story.
Strength in numbers. At least Qantas Airways hopes so. The Australian airline is splitting its international operations from its domestic businesses. The move comes after the company saw an 83% slump in its net profit for the last half of 2011, and it also announced that it would cut another 500 jobs, bringing the total to 2,000 job cuts since August.
A decision like this is never easy. I know there will be disappointment amongst those workers directly affected, their families and their colleagues. However, we have sought to minimise the impact on our people while delivering the best results for Qantas.
The airline's international arm has fallen victim to soaring fuel costs, labour strikes, and competition from the Middle East. Last year, Qantas scratched plans to develop a hub in Singapore or Malaysia and has since closed several international routes. And now unions fear Qantas could keep costs down by sending jobs overseas.
Our worst fears have now been realised. That is, they're closing down this facility with 400 employees, and it's going to be a slow death of the Avalon facility.
Qantas told France 24 that there's absolutely no prospect of shutting down or selling the international business, despite its losses. The split goes into effect July 1st.
Just while we're on the Qantas story, Stuart, a separate but related development. The chief executive of Jetstar is stepping down. Now, Jetstar is the budget, low-cost carrier offshoot of Qantas. Done very well over the last 10 years, turning itself into a leading airline. Bruce Buchanan is stepping down, part of that management restructuring we've just heard about with Qantas. He says he'll remain in Australia to work with other Australian companies. He'd always been tipped as a successor to the Qantas CEO, Alan Joyce, but we haven't heard anything on that development. Obviously, a turbulent year for Qantas, as we've been saying. Many people will remember it was one of the first airlines to invest in the A380, had that blowout of the engine last year, and really didn't recover in terms of losing money.
Talking about Gucci and Guess looking the same, to me, Jetstar and Qantas, they look pretty the same as well.
Oh, no, very different. The
just planes, aren't they? Just before we go then, the world's tallest tower is going to open to the public for the first time.
Well, you could probably see this from a Qantas aircraft.
You probably could, yeah.
Zipping over Tokyo anytime soon. An interesting one, something I didn't realise, it doesn't qualify as a skyscraper, therefore this is the Sky Tower in Tokyo. It's just open to the public. It's the world's tallest tower, around 634 metres high, but it's not the world's tallest building. That's the Burj in Dubai, but this is classified as a tower and not a skyscraper. Therefore, it is the world's tallest tower. Apparently, it qualifies as a tall tower because it has broadcasting equipment on top. That's principally the role of this building, but also opened as a tourist attraction.
No penthouse.
Not as far as I know. I think there is some office accommodation, but your penthouse at the top there.
It's right at the top, yeah. It's still not as big as our Eiffel Tower and our weather map, though, is it? Beats it by miles. Owen, thank you very much. That's Owen Fairclough with the business news here at this time every day here on France 24. The very latest news, though, comes up with Claire after the break. Stay with us.